You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 11th day of March, 2026. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room. So to get into that one, you need to be a member or taking your 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through the simple steps. We'll get you indicators up and indicating today. Your trial will officially start tomorrow and will run all the way through next Wednesday afternoon. You get 5 consecutive trading days on the trial. The weekend does not count against those 5 days, and there's no credit card required. Now, you will gain access to the live training room, but you'll also gain access to everything we do the other 22 hours of the day. You see, we go to work Sunday night at 6 p.m. Eastern. That's when the Globex markets open. And we work literally around the clock until Friday afternoon at 5 p.m. Eastern. So what's going to happen when you take your trial, we're going to treat you like you were already a member. A genuine passport holder with access to everything. Again, there's no credit card required. We want you focused on what's being taught. So at the end of your trial, you'll be able to make a well-informed, intelligent decision as to whether or not trading is right for you. So again, stick around to the top of the hour, 1 p.m. Eastern. That's when Michael will join us for a recap of everything that happened this morning in the live training room, and then do a little bit of live trading as time and the markets permit. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go here to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit of doing it that way is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it is a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips, because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. And as you can see on our schedule here on the left side of the screen, we're going to start where we always do, with our daily devotional. The topic that we've been on for a couple weeks, and we'll still be on for probably another week and a half. God, where are you? Today's scripture is Matthew 4, verses 18 through 20, and I'm going to share it with you from the NIV translation. As Jesus was walking beside the Sea of Galilee, he saw 2 brothers, Simon, called Peter, and his brother Andrew. They were casting a net into the lake, for they were fishermen. "Come follow me," Jesus said, "and I will send you out to fish for people." At once they left their nets and followed him. Again, that was Matthew 4, verses 18 through 20. What does it take to change the course of your entire life? For some of Jesus' first disciples, it took just 2 words: follow me. Picture the scene at the Sea of Galilee. Simon Peter and Andrew were casting nets into the water, the same routine they'd followed countless times before. James and John were nearby with their father, Zebedee, mending nets and preparing for another day's work. These were ordinary working men with calloused hands, established routines, and predictable lives. Then Jesus walked by. "Come follow me, and I'll send you out to fish for people." No lengthy explanation, no detailed job description, no promise of financial security. Just an invitation that would turn fishermen into world changers. At once they left their nets and followed him. Matthew 4:20. The immediacy here is stunning. They abandoned their livelihood, left their father's business, and walked away from everything familiar to them. Something about Jesus' presence and his call compelled instant obedience. John's Gospel gives us another perspective on these early encounters. When John the Baptist pointed to Jesus saying, "Look, the Lamb of God," two of his disciples immediately followed Jesus. One was Andrew, who quickly found his brother Simon and declared, "We have found the Messiah." John 1:41. Not everyone responded immediately. When Philip found Nathanael and announced they'd found the Messiah, Nathanael was skeptical. In John 1:46, he said, "Nazareth? Can anything good come from there?" But Philip's response was perfect. "Come and see." After a single conversation with Jesus, Nathanael went from skeptic to believer. "Rabbi, you are the Son of God. You are the King of Israel." John 1:49. These first disciples were remarkably ordinary, men with rough edges and limited education. Yet Jesus saw their potential, not their past. He called them not because they were equipped, but because they were willing to trust him to equip them with what they needed day by day. Jesus is still in the business of calling ordinary people for extraordinary purposes. His invitation hasn't changed. Follow me. It may not require leaving your profession, but it will certainly transform how you live it. Like those first disciples, your response to his call could impact the world in ways you never imagined. The same voice that called fishermen from their nets is calling you today. How will you respond? Let's pray. Jesus, as you call the first disciples to follow you, help us hear your voice and respond with willing hearts. Give us the courage to leave behind whatever holds us back and to walk faithfully in your calling. Guide our steps as we follow you each day. It's in your name we believe and pray. And everybody said, amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 486 points, just over 1%. NASDAQ is down 50. S&P 500 down 28. And the Russell 2000 down 18. In the commodity basket, crude oil up $4.59, trading 88.04 last. That's a gain of 5.5%. Gold down $67.60, trading 51.7450 last. That's a drop of almost 1.5%. Silver down $4.88, trading 84.74 last. That's a drop of almost 5.5%. In the Asian markets at the close, the Nikkei posted a gain of 776 points, just shy of 1.5%. The Shanghai rose 10. The Hang Seng dropped 61. And in the European markets at the close, FTSE down 93, almost 1%. The DAX down 375, over 1.5%. And the CAC down 40. So we had a mixed day in Asia. It was a red day for the UK. And at the moment, it is a big red radio Wednesday here in the US of A. Let's take a look at the global news. Lebanon in crossfire. Roughly 700,000 people in Lebanon, including about 200,000 children, have been displaced as Israeli airstrikes on Beirut continued yesterday. Many are sheltering in schools and stadiums. Lebanese officials say the death toll is rising by roughly 100 people a day, with at least 570 people killed as of yesterday. Israel began bombing Lebanon last week after Hezbollah, an Iran-backed militant group, attacked Israel in retaliation for the killing of their supreme leader. Lebanon's government has called for talks with Israel aimed at disarming Hezbollah and postponed parliamentary elections for the next 2 years. The country, which borders Israel to the south, was already struggling to recover from a nearly 14-month war between Israel and Hezbollah that officially ended in 2024, though UN experts reported continued strikes in Lebanon after the ceasefire. In Iran, state officials say more than 1,300 civilians have been killed, as U.S. officials report striking over 5,000 targets over 10 days, with roughly $5.6 billion spent on munitions in the first 2 days. The Pentagon has also reported 7 U.S. service member deaths and about 140 wounded. The eyes of a mouse. Scientists have reconstructed videos of what mice are seeing by analyzing their brain activity. This is a new study released yesterday. The research could lay the groundwork for understanding how different animals experience visual input. In recent years, researchers have used fMRI scans to monitor human subjects as they watch images or films. They then recreate those images, including with the help of generative AI tools like Stable Diffusion. In the latest study, researchers showed 10-second videos to 10 mice, reconstructing frame-by-frame visuals by analyzing the brain activity of 5 mouse subjects. Instead of using fMRI scans, which analyze blood flow, these scientists used single-cell recordings, aiming to capture the activity of individual neurons in the visual cortex. That's about 8,000 neurons per mouse. The goal was to capture a more precise measurement of brain activity. The team then compared pixel-level data between the original and reconstructed videos. And for those who experience vision problems or blindness, as many of us grow older, run into things like detached retinas and other signs of aging. Maybe there's some hope here. Sounds like we're just at the beginning stage, so maybe in our lifetime, you never know. South Korean airport operators built a concrete mound at the end of Muon International Airport's runway to cut cost a few years back in 2024, according to a government audit released yesterday. The decision violated safety standards and contributed to an air crash that killed 179 people. A report released earlier this year used computer simulations to reconstruct the Boeing 737 belly landing and collision with a solid concrete mound after a bird strike left its landing gear inoperable. The audit found the airport had used solid concrete rather than collapsible materials to support a localizer antenna, a navigation aid that guides landing aircraft, because reshaping the surrounding terrain would have been more expensive. Investigators also determined that airport officials falsified inspection reports for 16 years to conceal the defect. The audit identified 14 similar localizer installations at 9 airports nationwide that did not meet government regulations. Officials said they are working to replace those with compliant structures. And keep in mind, we're talking about South Korea here, not the U.S. Turning to Wall Street, oil futures held near the mid-80s per barrel today after the group of 7 agreed to release a combined 400 million barrels from the Strategic Petroleum Reserve, the bloc's largest release on record, as violence continues to escalate around the Strait of Hormuz. Now, 400 million barrels of oil. It's a lot of oil, right? But in the grand scheme of things, at the rate the U.S., at the burn rate of crude oil, not only in the U.S., but I mean across the world, across the Arab Emirate states, how long is it going to last? A few days? Maybe a week? Remember when Biden, for no reason, raided our U.S. strategic crude reserves? You saw gas prices at the pump. Now, this was right ahead of the midterms. Gas prices dropped a couple pennies for less than a week, and they went right back up. Oh, and by the way, in case you don't know, he sold those reserves to China. Interesting fact, huh? The IEA said the coordinated release, the largest in the agency's history, is intended to stabilize global energy markets amid mounting security risk at one of the world's most critical oil shipping choke points. I mean, it is beyond obvious that the only way we're going to put an end to this is to take the Strait of Hormuz. In particular, that one little island there that they say pumps out about 80% of Iran's oil. Do it. Get it done. I mean, we've got teams of commandos from the Army, the Marine Corps, and not too short shift any other military agency. Do we have the manpower and the technology to do the job? Well, I think the last 11, 12 days speak for themselves. We can and we should. Inflation, a measure of the prices you pay, continue to pinch Americans' pocketbooks. Though a gradual cooling appears to continue. Now, whoever wrote that line right there? Hal Bundrick. Hey, Hal, where were you when inflation was at 40-year highs under Biden? Just asking. The Bureau of Labor Statistics, that name that's kind of like jumbo shrimp. Consumer Price Index, which was released this morning, rose slightly to 0.3% on a seasonally adjusted basis in February, just as economists had expected. It was up 0.2% in January. Over the past 12 months, consumer prices were up 2.4% before seasonal adjustment, the same rate as in January and also as expected. The data was compiled before the U.S.-Israel war against Iran began, so the subsequent sharp rise in oil prices is not reflected in this report. However, it will be another factor for the Federal Reserve to consider before deciding on interest rates next week. Yes, we got an FOMC next week. Broad expectations are for the Fed to keep interest rate cuts on hold. And I'm going to be honest with you. There was scuttlebutt about, at the last meeting, there was discussion amongst the Feds about actually raising rates. So be prepared for a surprise if it comes next week. JP Morgan is limiting private credit lending. From Bloomberg, JP Morgan Chase, down about 1% today, is restricting some lending to private credit funds after marking down the value of certain loans in their portfolios, the latest sign of stress in the $1.8 trillion industry. The devalued loans are to software companies, according to people familiar with the matter. That industry is home to some of the biggest borrowers in the private credit market and has been in the spotlight in recent weeks due to investor concern over the impact artificial intelligence will have on its business model. Wall Street lenders like JP Morgan act as banks to private credit funds, providing them with cash using their loans as collateral. A reduction in the value of those assets will curtail the amount the bank is able to lend to these funds, heaping further pressure on an industry already grappling with a series of hefty withdrawals from retail investors, spooked by renewed scrutiny of underwriting standards and developments in AI. Yeah, JP Morgan, they've got a game plan to be the last bank standing. And that's when Bezos will buy them out. Also from Bloomberg, 3 vessels were hit by suspected projectiles in the Strait of Hormuz and Persian Gulf today. One of the heaviest days of attacks since the Iran war began. A cargo vessel called Mayuri Nari was attacked in the Strait of Hormuz. The Royal Thai Navy provided the information. Star Bulk said its ship, Star Gwyneth, was also hit, as was a third vessel, which is a container ship, according to the UK Maritime Trade Operations Centre. Traffic through the strait, a key choke point for energy and other exports, has virtually ground to a halt since the U.S. and Israel launched airstrikes on Iran late last month, prompting the Islamic Republic to retaliate with attacks on ships and elsewhere in the region. The near standstill has forced some of the biggest Gulf producers to lower oil output as storage tanks start to fill. Now, I already gave you the solution to the problem. We'll see what happens. And consumer prices broadly remained unchanged, rattled the markets, and threatened to wear a hole in Americans' pocketbooks. The CPI increased 0.3% in February on a monthly basis and 2.4% over last year, matching economist expectations while showing little change from January's cooler-than-expected print, according to the Bureau of Labor Statistics. That's where we get the data we can trust. Now, the chief global strategist at Principal Asset Management said in a statement, today's CPI report is already something of a historical artifact. With oil prices up roughly $30 in recent weeks and potentially heading towards triple digits, investors are far more focused on how the conflict feeds into inflation over the months ahead. I think anybody with a healthy portfolio should be looking for some way to short this oil market. Go out of the money. But of course, get your advice from a licensed investment professional. And last, Capitol Hill, White House Press Secretary Carolyn Leavitt reacted to Senate Majority Leader John Thune, saying the math doesn't add up to pass President Donald Trump's Save America Act. Leavitt said of the president yesterday, I think the urgency behind this need to pass the Save America Act and the president's desire to get this country-saving legislation passed have been made quite clear. Now, what are we talking about? The Save America Act? It means you got to show ID to vote. And you got to actually go to the polling place and vote, unless you have a doctor's note that excuses you. Why are the Democrats so freaked out over a legitimate election? Unless you believe people who are not U.S. citizens should be allowed to vote in U.S. elections. Then if that's your belief, then nothing I can possibly say is going to make sense to you. Go to Germany and try to cast a vote. Go to the UK and try to cast a vote. Go to China or Russia and try to cast a vote. Yeah, that dog won't hunt, will it? But the Democrats believe, hey, if you can fog a mirror and you're standing on American soil, you have a right to vote. Thune has said the votes aren't there to make the filibuster, and the votes aren't there for a talking filibuster. These are the only options for the Senate to pass the bill without the customary 60 votes to end debate. Trump wants all options on the table, and he wants the Senate to move as quickly as possible through whatever means necessary, according to Carolyn Leavitt. Trump said Monday that the Save America Act should be the GOP's #1 priority ahead of the midterms. It will guarantee the midterms, Trump said. If you don't get it, big trouble, my opinion. On Truth Social, Trump said he would not sign other bills until this is passed. Now, polls done from CNN to ABC to CBS to MS Now to conservative outlets show that the American people, as a whole, despite your political affiliation, believe that Americans should, by a huge margin, should have to show ID for the sacred right of casting a vote. How anyone could think otherwise, well, I guess I'm just not that smart. I'll keep trying. Logic 247 is our 24/7 around-the-clock E-mini alert service. We're currently in week 397. Over the last 397 weeks, we've issued over 21,700 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure, a simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern. She will, of course, update it this afternoon, early evening, as she does each day. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 51 Logic 247 alerts. At the time Valerie did the recap, we were still waiting on the outcome of 16. I'm sure some of those have resolved themselves one way or another over the course of today and what's left of today. So at the time of the recap this morning, we had 35 actionable alerts, of which 3 or 9% would have been stopped out, again based simply on market structure. I think last week we ended with 7%, and if I'm not mistaken, we ended with 7% the previous week. But it's all in the Telegram channels, both the private and the public ones. So it's a matter of public record. You feel free to take a look at it anytime. The purpose of the Logic Alerts is to help you learn how to read a chart. If you never actually trade a Logic Alert, that's okay. Use it for the purpose intended, to learn to read the chart. If you're going to trade and be consistent, you need to know where to anticipate potential resistance, where to anticipate potential support, because that reveals the windows of opportunity that lie between those important points, and it's where you'll find your best high probability, low risk trade opportunities. Every Logic Alert has an entry price, long or short, an initial target designed to help you get your goal for the day. In most cases, additional targets, and then always a final trade to target. The Logic Alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 397 weeks is a pretty long time. It's over 7.5 years. But quite a few years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different in a lot of different ways. But for the purpose of this discussion, I'll just say this: they don't come out around the clock. They're published as a static report, typically 5 minutes ahead of the Globex Open each evening. The Wednesday session that we're in right now began last night at 6 p.m. Eastern. The Wednesday session will end today at 5 p.m. Eastern, 1 hour after stocks stop trading in the U.S. Markets will go quiet for an hour, and then tonight at 6 p.m. Eastern, the markets will reopen, and that will be the beginning of the Thursday session. So last night at 5:55 p.m. Eastern, All of our traders had all of these targets. The ES, the S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. As we go through the individual charts for the individual markets, and you see these targets drawn out on the screen, just remember, all of our traders had those targets 5 minutes before the market opened. So now we'll go to the charts, and we'll start out with the bellwether, the S&P 500 E-mini futures. Okay, there we go. Now, this was that gap lower open we had Sunday night. We opened here. We had a red candle all the way down to here, creating a perfect double bottom. Okay. But Monday, we closed the session. We ran up. We hit the black step line, which is potential resistance when it's directly above price. And so we closed slightly off the high of the day. Quite the turnaround story. Yesterday, we had a doji. We reached all the way up to and just above the 24% fib extension. And if you look at this wick and this wick, so in other words, we're going back to Friday and Tuesday. What do we got right there? Friday and Tuesday, a double top. Price was rejected before it touched the BBC. And that's really important because we had 12 days where we were below the BBC. And even on the days that we spiked above it, we were still touching it. So this leg and retracement held for 12 plus days. Then we had a candle finally open and close. This was last Friday. We opened and closed without touching that green line, the BBC. Now we've had 1, 2, 3, 4 days where we've opened and closed below the BBC. Now, that's important because price always reverts to the mean. I don't care what you trade and how you trade it. It's kind of like gravity. It just is. Price always reverts to the mean. In our case, the mean is this green line. Call it the BBC. Just means if we're above the green line, we're bullish and expect higher prices. Below the green line, we expect lower prices. Higher prices, lower prices, higher prices. Pretty simple. What's important to understand, though, is the retracement or the pullback to the BBC. Whether it pulls down from above or pulls up from below, the pullback holds more often than it doesn't. That's important. Now, we had 2 days here where we came relatively close to touching the BBC, but we did not. And I'm going to point this out at least one more time. Going back here, this is end of October, the high, and then the low right here, November of last year. Okay, the day was actually November 21st. Since then, what have we done? We've run up, we've run down, and up and down, but we've basically gone sideways with a definite bias to the downside. And these 1, 2, 3, and now potentially 4 days below the BBC without touching it, the daily BBC. Well, I would say anticipate lower prices from here. This is the zero line on the fib extensions. And then here's the double bottom right here. November 20th, to March 9th. Double bottom. Okay. All of the alerts, both the Logic 247 alerts and the Concierge Trade alerts, are all done on a 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose many years ago. And they say if it's not broke, leave it alone, so I did. The vertical lines separate today, Wednesday. Here's Tuesday. Here's Monday. Here's that gap lower open Sunday night. And it kept plunging and plunging, found support at a weekly zone, and then recovered really quite nicely on Monday. Remember, the Monday session began Sunday night at 6 p.m. Eastern. Okay? And closed that little tiny candle back there at 5 p.m. Eastern on Monday. And then this was the beginning of the Tuesday session, 6 p.m. Eastern, Monday night. Black step line, cross blue and climbing. When that happens, see on the way up, see how they're running parallel? This black step line's on the left side, blue and climbing's on the right side. But when that dynamic changes, when the step line crosses to the right side of blue and climbing, you should expect a retracement back to the BBC. And what did we say? The pullback holds more often than it doesn't. This pullback held and went on to put in higher highs. And we caught another pullback. And where did we find resistance? At this week's highest weekly trading zone. That's what the horizontal lines are. The weekly trading zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the weekly zones every Monday for over 16 years now for our members. When price rallies up to a weekly trading zone, we expect resistance till proven otherwise. When price drops to a weekly zone, we expect support till proven otherwise. And when we hit the highest weekly zone yesterday, there was the resistance that we would expect. Here's where we opened last night. Right here, the black step line crossed red and falling. Up we go. We make it above the BBC. Now you see this wick right here. Okay, that's basically the overnight highs right there. That's market structure. Could I have chosen that as a long target? I could. However, I wanted to give it a little more room, so I used this area right here where blue turned to red. Still gave you plenty of room to get your goal for the day, even though we didn't actually physically touch the long target. Then price gets below the BBC and drops right to the short target, to the tick, which is simply based off this low right here from yesterday. When the market finds support, it's going to go look for resistance, BBC. Resistance sends the market looking for support, short target, which bounced us back to the BBC, which sent us back down to the short target. Now, we've consolidated sideways for a couple candles. Price is attempting to retrace back to the BBC. But as you can see, it's running into trouble because it's hit red and falling. Red and falling is bearish. Blue and climbing is bullish. As you can see, bullish, bearish, bullish, bearish. Pretty simple, okay? Now, we did spike the short target a little bit. However, if we take out those lows, then it could be pretty fast sailing down to the zone below at 67.23/24. That is our expectation because price is below the BBC. What would change that expectation? To have a 30-minute candle open and close above the green line, the BBC. Then we would have potential resistance here, here, right there, and then at the long target. But we are below the BBC. We're trying to print a green candle, but the black step line and red and falling, because they're directly above price, are acting as resistance. So institutional traders, the ones who actually move price, they've got to make a decision here. This is an important point in today's session. On the Dow, here's where we opened last night. We got above the BBC. We attempted a run higher. We didn't quite make it. Here, or as you can see, right where blue turned to red, that's where I put the long target. I wanted to give it some room to run. But didn't want to run in that direction. So, by looking left, you should know to expect potential resistance here and then potential resistance here. Price got below the BBC, blue and climbing, turned to red and falling. And we got a nice leg. And then a retracement. Price always moves in legs. Leg retracement, leg retracement, leg retracement, leg retracement. Until eventually it starts running the other way, like this. Leg retracement, leg retracement, leg retracement, leg retracement. It's pretty simple, right? So the pullback to the BBC held here and here and here and here and here. We hit the short target and caught a really nice bounce all the way back to the BBC. See, we came down to the short target and the zone. We spiked it, but then we closed back above it. Then this candle opened green and ran all the way up to the BBC. The pullback held, and what was a big green candle ended up being a red candle. Now that was the 30-minute candle that opened at 10 a.m. Eastern this morning. The open on Wall Street, which often produces the largest candle of the day, was a little quiet today. Now, we've made it below the zone, and as you can see, the black step line in red and falling, see how they came down parallel? But look what's changing. The black step line is about to cross to the right side of red and falling. What does that mean? The price is going to attempt another retracement to the BBC. Now we know the pullback holds more often than not, like here, 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 and here. But we also know eventually it will trade through. Is that what will happen this time? Well, you'll have to wait and see, because nobody knows what's going to happen next in the market. Not no one, not no way, not nowhere. It's just not possible. On the Russell, here's where we opened last night. We did get above the BBC. We did manage to reach this high from yesterday, right there, that wick. You should be expecting that as potential resistance until proven otherwise, but it did prove to be resistance. Again, I was trying to give it some room, okay, right up here where blue turned to red, but the market chose a different path. That's why I prepare for both sides. I don't have to worry, is the market going to go higher or is it going to go lower? I just develop a business plan or a trading plan for whatever it chooses to do. And whatever it chooses to do, because I have no power over what it does. So whatever it does do, that's what I want to do. So we get below the BBC, blue and climbing, turn to red and falling, and buyers come in right here, right off that low, right there. See it? Support sends the market to resistance. Resistance sends the market back to support. This time, this candle, we touch the short target. Support sends us back to resistance at the BBC, which then sends us back to support at the short target and the weekly trading zone. That weekly trading zone is 2524/25. And as you can see, this green candle is price is always trying to get to the BBC. And it's always trying to get to a weekly trading zone. Price is below the BBC, it's trying to get to the zone below. If price is above the BBC, it's trying to get to the zone above. Okay, right now price is just trying to get back to the BBC, but it's running into resistance because both red and falling and the black step line are directly above price. On the NQ, we are above the highest weekly trading zone. Now this happened yesterday morning. And what we've learned over 16 years is when price exceeds the highest weekly zone or the lowest weekly zone for the week, by Tuesday morning, chances are by the end of the week, we'll be at the other end of the spectrum. That would mean possibly near the lowest weekly trading zone. So we come out of the gate last night, red and falling turns to blue and climbing. Step line crosses red and falling, so we get above the BBC. We take out this high right here by just a little bit, and then we fail. Blue and climbing turns to red and falling, and we come down right to the weekly zone, basically to the tick. Support sends us to resistance. Remember, the pullback holds more often than not. Resistance sends us back to support at the zone, which sends us back to resistance at the BBC, which sends us back to support at the zone and blue and climbing. And when that blue and climbing kicked in, it sent us all the way up to the long target, which was based off this right here, where blue turned to red. We even spiked it a little bit. But that spike, as you can see, is identically where that little spike from yesterday is. But what's really important is we failed to take out this high from yesterday. So that's a sign of weakness. And it sent us right back to the weekly trading zone, which was published Monday morning at 6:15 a.m. Eastern. Remember, when price drops to a zone, we expect support until proven otherwise. Support has now bounced us up to the BBC and red and falling. So that's resistance times 2. If price can overcome that resistance, okay, then look for potential resistance here, 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 and here. Now, you really, in a perfect world, you want to see a 30-minute candle open and close above the BBC. So you only need 10 ticks to get your goal for the day. So you could say, I'm going to go 25,135 to 25,145. That's a very kind of safe, conservative trade. Crude oil. Despite all the hullabaloo, it's just trolling sideways. Now, this also looks like transition, okay? I was showing you on the ES daily chart, transition that looks like it's leading to lower prices. this transition is starting to look like it's leading to higher prices. Okay, Michael is here. We'll pick up where I left off when I come back. Michael's going to give us a recap of what happened this morning in the live training room. Do a little live trading as time and the markets permit. And then again, I'll finish the recap and wrap things up with a good word for the day.
Excellent. Here we go.
All right, looks good.
All right. Good afternoon, everyone. Today is Wednesday, the 11th day of March, 2026. Now, if you have not taken a free trial with us and you want to take a free trial, go here to mytradingview.com, click on the purple button. There is no credit card required for the trial. Once you click that purple button, you will be sent to this registration page, I think. Yes, this registration page. Or all that we ask for is your name, your email, and your phone number down at the bottom. Make sure you use the TradingView login ID. Okay, once you've given us that, we will know that you've taken the free trial, and we'll get you all the information that you need to take advantage of the free trial and get your indicators indicating on your desktop. All right. All right. So we had a pretty good day today, much better than yesterday. Above that 1200 mark, which is where I like to have every day. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Just have those down at the bottom. Yeah, they're there. Okay. You have to read all the CFTC risk disclosures down at the bottom. Today is the 11th day of March 2026. As I said, we were up 243 ticks on the NQ, 35. That was the high for the day. 35 on the Russell. That was the high for the day. -6 on the YM. That was about the middle of the day. And +17 on the ES. And that was also the high for the day. So we ended up with $1,572 per contract on the morning session. Today it took 10 minutes and 4 trades to get to $1,150. And we took a total of 37 trades with 6 stop outs today. So 83% of our trades today were break even or better. On the month now, we're at $12,082. It's over 8 trading days, averaging $1,510 per contract per 2-hour trading day. On the year now, we're at $56,335. That's over 45 trading days, averaging $1,251 per contract per 2-hour trading day. Now, the 24/20 blueprint, if you were to quit trading when you get the goal for the day and add 1 contract per month, right, the goal for the day being $100 per contract, do that and add 1 contract per month. So far this year, you would have only had to work 5.31 hours if you did everything exactly like I did. Got all the same slippage and everything else exactly like I did. You would have had to only work 5.31 hours. And you would be up $11,977, averaging $2,252 per hour on the year so far. Okay, that's pretty good money. 45 trading days, averaging $2,252 per hour. Okay. All right, let's get into the actual trades now. We'll start out with the Russell. We didn't have that many trades on the Russell. Russell volume, and most of the trades on the NQ. The ES was second. Russell, we had the least amount of trades on. So let me get the question box out just in case anybody asks a question today. This group is usually pretty quiet. We have a pretty good group in here right now compared to normal. If you guys have any questions, just feel free to just type it in, okay? Don't feel that you're interrupting me at all. All right, here are the first batch of trades on the Russell. The very first trade on the Russell, we picked up 16 ticks, and the next trade we picked up 5 to get us to 21, then 5 more to get us to 26, and 9 to get us to 35, and that is where we ended with the Russell. I feel like, and there was a trade there, there was a trade there. There were 3 nice trades right in a row here during the break. This is a 19 range, remember? So every one of those trades was a really nice trade. Enough to get the goal for the day on each one of those. It looks like it traded pretty well here during the break. Just looking quickly across it, there was a trade there. Those three that I just mentioned, there was a trade over here. Yeah, that's pretty much it. So 5 trades. All good trades during the break on the Russell. We ended up with plus 35 in the morning session. Now the YM, let me pull them back. Okay, so we got negative on the YM quite a bit. This was the first trade we took on the YM, and I think that might have actually been where we got the goal for the day. Part of what we got goal for the day on, we had plus 10 there. Plus 10 there, and I believe we had 13 on the NQ total is where we ended up getting the goal for the day, but plus 10 there. And I have that in blue because it didn't actually come out of the overbought on that one. It came out of the overbought right there. I thought it was in the overbought. I was mistaken. So we got 10 on the first one. Then the next one we picked up 20 ticks. We got up to 30. Then the wheels started falling off. We had a stop out down to 5. Then another stop out down to minus 20. And then it just didn't give us any trades for a while. Here we got from minus 20 to minus 15. So we picked up 5 ticks and went from minus 15 to minus 6. So we picked up 9 ticks. And that was it for the YM. I don't know if the break was as good to that. That's not a valid trade, not a valid trade. This looks like it might have stopped you out to the tick. So the Russell just wasn't trading all that well today. This would have been a decent trade there. But in all this chop, there were 1 or 2 trades that would have been break evens. It just wasn't trading all that well today. Didn't have the movement exactly in sync with our tools. Now on the ES, all the way back here. Here we are on the ES. We started out here on the ES. We picked up 5 ticks on the first one, and then we stopped out. That put us at minus 5. And we didn't do anything for a little while. And we stopped out again. Well, wait, we got something. We got a 2 somewhere that put us at minus 3, and then we stopped out again. That put us at minus 13. Then we picked up 12 right there. That got us to minus 1. And we stopped out again. I don't know where the stop out again was, but we stopped out again, and that put us at minus 11. Then we picked up 2 ticks to 9, then 8 ticks to minus, well, 2 ticks to minus 9, 8 ticks to minus 1, then 8 more ticks to plus 7, then 5 ticks to 12, then 4 ticks to 16, and 1 tick to 17. And that is where we ended up with the ES this morning. Okay, and during the break, I don't see a ton of easy to do trades right here during the break. Okay, so the ES didn't trade all that well during the break. Now, the NQ, do we have any trades right now? We do not. The NQ today, we had the majority of our trades. If we hit control and back on that guy, get all the way back to the beginning of the session. There we are. All right, so the first one right here on the NQ, we picked up 3 ticks on that, then 10 ticks there to goes to 13. I think that, coupled with the YM at the time, is where we got the goal. So we're at 13 after that one. Then we had, I think we had a 4 tick trade there. Then we had a big trade there, got us up to 58. Then we had another big trade there, got us up to 108. Then we went to 115. Then we stopped. We went from 115 to 173, somewhere in there. And from 173, we stopped out down to 137. Then went to 146. Then we stopped out down to 110. And then from 110, we went to 120, then 134, 134 to 144, break even, 144 to 159, 159 to 166, 166 to 205, 205 to 213. And I don't have the last three trades picked out. We went from 213 to 226, and 226 to 240, and 240 to 243. And that's where we ended up with the NQ. Now during the break, nothing is jumping out at me here. It is easy trades to take. Nothing in there was good. It really didn't give all that much during the break. One trade right here. That would have been the nicest trade during the break. So that brings us to current, where we are right now. And that is just about to have a trade here on the YM. We need an up close on the YM for the long trade. Nothing here on the NQ, nothing on the S, and nothing on the Russell. The Russell's pretty close, so an up close on the Russell will also be a trade. It's going to be 7.2 up to 9.2. So it doesn't go down anymore. Okay, it went down a little bit more. It can't go below 6.8. And it did. So that's not going to be a trade. The YM could still be a trade. The Russell's going to be one tick low, I think. If he even gives it up close. Would I please focus on one of those Russell trades not taken during the break, showing how I identified it? Sure, how? I would love to. All right. So let's just go one bar at a time, and I'll stretch it out like this. Okay. So what I'm looking for here, you see how down here, if you watch the trigger down here, when it comes out of the overbought, you know that this down close is what took it out of the overbought. The next down close after that, the space between here and the midpoint, is just about enough for it to happen. If it does give a down close immediately on the next bar, it's just about enough to hit the mid band. And then you'd just be looking for an up close, because that would put you in the oversold right there. Another down close would put you in the oversold, and you'd just be looking for the up close. Okay. So you go one more bar over. It had gone, it didn't go straight down. It went up until it went down here. Now this was not enough to get to the mid band, but it was enough to put it in the oversold. So the next bar has to hit the mid band and close up to take it out of the oversold. Hit the mid band and close up. Okay. All right. Well, the next one didn't close up. The next one closed down, but it's still there. It's still good. All right. So now the next bar has to touch the mid band and close up. All right, that means it can't keep going down and stay away from the mid band. It's got to actually close up and cross up above the mid band. That's what you're looking for on the next bar. All right, and there it is. It crossed up and came out of the oversold, crossed the mid band. So your entry is going to be right here, the open of the bar after this close. That's what you're going to be looking for. Right, the open of the bar after that close. And there it is. And that went 19 ticks in favor. From the open straight up to the top. Okay. And so then it went up, and now you're looking for the same thing. You got into the overbought, so you're looking for the same thing. You're looking for this next bar to be the one that might be touching the mid band. All right, you need a down close to get it into the oversold. You got to have another down close. This one's not enough. You need one more down close. And there's the down close. Now you're in the oversold. You're at the mid band. If it goes straight up from right here, it will cross the mid band. You see how this one crossed the mid band on the way down? The next one goes straight up, it will cross the midband. And so the next one would be your trade if it goes straight up. And it did. Went straight up and it crossed the midband. That's your entry. Okay. The next bar, the open of the bar after that. There it is. That went 19 ticks in favor. Even more. And now you're in the same situation. Okay, you're in the same situation right here. It's coming down. You get the first down close. You need the next down close to get you into the oversold and down toward the midband. There's the next down close. It didn't hit the midband quite right there. You did get into the oversold, but it didn't quite hit the midband. So the next bar actually hits the midband and comes out of the oversold on the up close. So that's your entry right there, the open of the bar after that. Okay. There you go. Another 19 ticks and more. All right. And that's it. That's all you're looking for again and again and again. So, I mean, I know I make it. When I scan the markets like this, I can say, okay, the up close of this bar was probably going to be one tick below the mid band. If it does hit the mid band, it's going to be a long trade on the NQ. All right. see, it was one tick and it actually flipped the YBR, so it's not a trade. But this one is at the mid-band, but we haven't gotten into the overbought yet. We need an up close on this bar to get us in the overbought, and then a down close on the bar right after it to cross down below the mid-band. Okay, that's what we need there. Oh, I didn't send you that email. I didn't send David that email. Let me write that down. I'll do that right now during the break. I'm sorry, I forgot. We talked about it. I was in the middle of like 50 things. I just made a note. Okay, so we need an up close followed by a down close here. On the ES, we're at the mid-band. We just need a down close. So 75 down to 73 on the ES. As long as it doesn't go up any higher, it just did 75, that's 73, 75 now, I think is what we're looking at. Okay, so the high of this bar is now 76.20, 74.75, I think is what we're looking at. On the down close. The NQ needs a down close too. Now, the way that these are coming together, it's making me feel like they're going to go up and hit the YBR. That's what this is making me feel like. No, neither one of these were trades over here on the long side. Both of these are in the red, so you're looking for shorts on both of them. And they both still could be shorts, I think. The high of this is at 77. That is at 74.50, yeah. So 77 times 75 would be the short on the ES right now. 10 points from the top of the bar on this. So 7.25 down to 97.25 on the NQ. All right, the ES was too high. That's not a trade. It ended up being not a trade. And the NQ could still be a trade, though. A down close on the NQ could still be a trade, but this ended up not being a trade. It didn't hit the mid-band. Okay, the mid-band was at 74.5 and it closed right there. But the NQ could still be. That's the only trade we have setting up right now, is this one. I didn't even look. We have, let's say we have 14 minutes in this session. Okay, if you have not taken a free trial, go here to mytradingq.com, click on the purple button, then fill out the form that comes after. Okay. We still need a down close. There it is on the NQ. The down close. It is on the NQ. Stop to plus 10. Stop to plus more than 10. And I'm out with more than 10. I don't know how much more. I'll tell you in a moment. NQ. It ended up being 6.25 points. So it's actually 25 ticks. And the ES didn't turn into a trade. Let's go here. That was the NQ for 25. 663. I did. Yep, I did. I responded to him already. Yes. Thank you. Pointing it out. Because I often miss those things. There. Okay, that's where we stand right now. And get back in here and see if we're going to have anything else. Now, we're too far away from the midpoint on the YM to have a trade. And we're probably not going to do anything on the Russell either. So Nothing right there. It was too far away from the mid-band. Okay, the Russell's not going to have anything because it's not on the Russell. What did the day end up looking like? The ES could have another trade here. Both the ES and the NQ could have another trade. Okay. These have lower swings, both of them. And these are showing weakness on the upside. So there it is on the ES, and here it is on the ES that I'm going to look at a couple ticks on. We also are in the NQ right now, and that just gave me 2 ticks there, and I believe, I don't know what it gave me. I'm out of the NQ. I don't know what it gave me. Let's go see. Let's go see. It's kind of weird. Okay, the NQ 88.25 down to 85.50. So we filled somehow at 88.25 down to 85.50. It's 11 ticks on the NQ and 2 ticks on the ES. Here. 3. 2. Okay. Get back in here. See if we can do any more. Nothing here, nothing here. Nothing else here. All right, this didn't go full cycle. Neither one of them went full cycle down. So we're not having another trade on the ES or the NQ right now. Oh. All right, so as we wait, it's 1:23. So far, I believe we've made up for the last couple of days. We're up $1,900, and we're down 2,050 between those two. So altogether, we're up 1,150 right now between today and yesterday. Oh, sorry, 2,150 between today and yesterday, and we were down 2,050. So that is good stuff. Now we just have to wait a few minutes. Oh, it did go off actually. These two that were never in the red are now starting to get little more bullish, and the others are flipping with it. So this flipped into the green. It looks like the NQ could flip into the green as well. And so far we have 3 trades, and all 3 of them were good so far.
Yes, Jeff.
What? Yes,
I
I
had
will
a
be
question.
next week. All week, yes, Jeff. The question was, will I be on vacation next week? Yes, I'll be on vacation after Friday this week. Yeah, I was just thinking about that. I was thinking about the car rental. Make sure I did. I screw that up almost every time. And I ended up renting from 2 different places. When I go up north, it's easier when I go down to see my dad for some reason.
Hey, I can do it for you, compare rates, and even actually book the reservation.
Really?
Yep.
I did not know that. I did not know that. I know there's one from Avis. You know, when you put the deposit down, you know, when you get the car. The last time I did that, Avis held on to the deposit for a month, even though I only used the car for 3 days. So, I mean, it wasn't a big deal, but if you know, I could see how it could be a big deal if you need that money.
Frontier has the best I've ever seen. They've got a Go Wild Pass. It's $400. You can fly anywhere that Frontier flies. That includes a few international destinations. As much as you want, as often as you want, and never pay a dime.
Yeah, I wish we had a Frontier that was near me here, or that landed anywhere I normally go. You know, if they had one of those where I normally go, that'd be great.
I'm surprised other airlines haven't attempted to compete with that. Maybe some have, and I'm just not aware of it.
Yeah, well, Frontier is not in a whole bunch of airports, so their overhead's probably a lot less, so they can offer that. Because the other airlines probably need to make a lot more per seat, I imagine. I'm guessing. I don't know.
There's a pretty big list of airports they fly to in the
I know.
U.S. and the international has shrunk. I think to about 10 places, mostly in the Caribbean.
I didn't realize they were still doing that. I thought that was a limited time thing at the end of the year last year.
Well, the thing they had at the end of the year last year, that was a much better deal than the current deal. I mean, the current deal is still a screaming deal. You fly one time, round trip, anywhere, and you got your money back. So the special they had last fall gave you like a year and a half of the same service.
Interesting. All right, well, we have run out of time. Looks like, guys.
You have to book your flight like 1 day in advance, unless it's an international destination, and then you got to book 10 days. Then you can book 10 days in advance. So
Let's check it out again. There might be an airport. somewhere around here. I think Charlotte has Frontier, but Boston doesn't, Providence doesn't, Connecticut doesn't. And they have something like in Fort Myers, Florida.
If you just type in Frontier Go Wild, it'll take you to a site where you can see all the various airports that it does fly to.
I'll have to check it out because it ended up being one of the biggest expenses.
And in some cases, flying to a somewhat nearby airport and then hopping in your rent-a-car and driving a couple hours, that's an option.
Feasible. Yeah. All right. Well, we got to wrap it up for today. In this session, guys, we only traded 3 times. We were up 2 ticks on the ES, 33 ticks on the NQ, put us at $1,900 in this session. So overall, in all these sessions, we are now, time-wise, we're averaging 16 minutes. And profit-wise, we're up to $137 per contract in those 16-minute sessions. So we're averaging the goal for the day in those 16-minute sessions. Just make sure this is adding down. It is, okay. Yeah, so if you haven't taken a free trial, go here to mytradingiq.com. Click on the purple button. There's no credit card required. Click on the purple button. It's going to bring you to the registration page. Just fill it out. Okay, just fill out the registration page. And once you do that, you will be sent everything you need to get into the room and to get your indicators indicating on your desktop. And that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
And during that trial, you not only have access to the live training room, but you also have access to everything we do the other 22 hours of the day.
Yes, everything.
We treat you just like you were already a member for 5 consecutive trading days. The weekends don't count against you. And as Michael said, there's no credit card required. We want you focused on what's being taught so that at the end of your trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. So, a recap of the morning session.
Today, it took 10 minutes and 4 trades to get to $1,150 with 10 contracts.
Good job.
Thank you very much.
All right, guys, we'll pick up where we left off. Crude oil, still wandering sideways. That chart did not look right to me today, so I went and double-checked to make sure bar chart still showed J as the current month, and it does. So I'll check again. And the volume for the J contract was double what the next contract is trading. So I tried refreshing the chart, and it still looked the same. So I'll keep you posted there. But basically, it's just kind of wound sideways. Now, earlier in the broadcast, when we looked at the daily chart of the ES, I showed you how we had what looked like a transition pattern with a bearish context. This is starting to look like a transition with possibly a bullish. And I realize nobody wants to see crude prices go higher. But if you trade that market, then I guess it matters to you. So anyway, we covered with the exception of gold and silver, we've already covered every market in granular detail. So if you missed any part of today's broadcast, 5 minutes after I sign off, go to youtube.com/CFRN and you can watch all or any part of today's broadcast in its entirety, start to finish. We archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. Obviously, you're not going to watch them all, nor do you need to, but it is a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. youtube.com/CFRN. Got 2 markets left, gold and silver. Here's where we opened last night, gold, and this is where we put in the high of the session, right here. Now the spot I was looking for resistance, I wanted to give it a little room to breathe, was right here. This little spot right here. Where blue turned to red, okay? And again, this is the importance of do your work ahead of time, and then all you got to do is wait for price to come to you. Now, even though we didn't hit the long target, this candle right here opened at 52.05 and ran up $1,800 per contract traded. That one candle right there. Okay. Now I did have a little drawdown and found support at red and falling. Remember, when red and falling gets directly above price, so you would want to be entering this as, because this candle opened red, okay? So you're not going to go long on a red candle. But once price rose and got above the BBC, that's where you want to enter. So let's call it 52.10. So 52.10 up to the high. That would be $1,300 per contract traded. Okay, so market found resistance. Now it's got to go look for support. And you can see it did that right at the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. Once the zones are published, they're carved in stone for the entire week. Support sends us back to resistance. Got a little triple top going right there. And then we get back below the BBC, find support at the zone, which bounces up to resistance. The pullback holds more often than not. This was resistance times 2, the BBC and red and falling. Okay, blue and climbing is bullish, red and falling is bearish. So we get below the zone at 52.02/03. Get a leg and a retracement. That's how price always moves. A leg and a retracement. Whether you're going up or whether you're going down. So a leg and a retracement, the pullback held. Leg and a retracement, the pullback held. Leg and a retracement, the pullback held. And then a leg that took us all the way down to the weekly trading zone, which is 5169/5170. That bounced us back to the BBC and the zone overhead at 52.02/52.03. That resistance now is going to send the market looking for support, which it has found again at the short target. $51.66. Last but not least, silver. Here's where we opened, and here's where we hit the long target. Right there where blue turned to red. Simple market structure. Resistance is going to send the market looking for support, which it found at the short target to the tick. Take a look. This low right here from yesterday. That's what the short target is based on. And when we hit it, what do? We bounced right up into resistance, which took us back down to the short target and the zone at 86.49/86.50. That bounced us back up to red and falling, the black step line, and the underside of the short target. That took us down to the next zone where we consolidated for a bit, and then we continued to drop Notice this area right here. Now, this is Wednesday, Tuesday, Monday. This was a bit of an unusual thing right here. The step line crossed and then crossed right back. Okay, remember when the step line crosses, you expect the retracement to the BBC. We got that. But then it immediately crossed right back. Led to a long extended move. And that's exactly where this low comes in. Okay, right there. So that bounced us back up above the zone. 2, resistance times 2, the black step line in red and falling. That dropped us back down to the zone at 8505/8506. Caught a little bounce, but not enough to get to the BBC, and that is a sign of weakness. So we're now printing a red candle. We've got potential support at the low of this candle, which is 84.90. Then potential support at the low of this candle, 84.56. And then right here. And then you're at the zone, 83.85/86. If the market were to reverse itself and start to head north again, it's got to overcome the black step line, the BBC, the zone, the underside of the short target, and then right up here you got a bearish cross. A bearish cross is when the red line gets below the green line and leads to an extended move. And that's what we've seen happen here. But the first time price revisits that area, which is roughly 88.74, you should expect that to be good resistance at least the first time up. One last look at the daily chart. We have now officially taken out yesterday's low. And like a heat-seeking missile, I told you the fast could be, that the drop could be fast and furious at the beginning of the broadcast. And where are we headed? To the zero line of the fib extensions. Beyond that, where we opened Sunday night, and next the Sunday night low, where we have a double bottom in place that stretches from March 9th all the way back to November 21st. Double bottom. The next weekly trading zone below us is at 67.23/24. So that would be basically right before we hit this zero line. Okay. All right. Again, if you missed any part of the other markets, as soon as I sign off, go to youtube.com/CFRN. You can watch today's broadcast in its entirety. To become a member, email Valerie, support@cfrn.net. Let her know you want to become a member. She'll send you all the information you need to know and instructions on how to become a member. And if you have any questions at all, she'll be happy to answer them for you. Again, her email address is support@cfrn.net. Let's wrap it up with a good word for today. The downside of immorality. Psalm 39:8. Deliver me from all my transgressions. Make me not the reproach of the foolish. After his violation of Bathsheba, King David finally got honest and confessed his sin to Nathan the prophet. Nathan said to David, The Lord also has put away your sin. You shall not die. However, by this deed you have given great occasion to the enemies of the Lord to blaspheme. That's 2 Samuel 12:13. Later, David would write in the Psalms, "Deliver me from all my transgressions. Make me not the reproach of the foolish." So let's take a moment and consider the downside of immorality when it is found out. Number one, your mate experiences shame, rejection, betrayal, and heartache. No amount of repentance or asking forgiveness can soften the blow. Suspicion replaces trust. Number two, the innocence and trust of your children are dealt a devastating blow. Their healthy outlook on life is likely to be severely damaged. 3. The heartache experienced by your parents, family, and peers is indescribable, and you are likely to be embarrassed in facing other Christians, especially those who have openly appreciated, respected, and trusted you. 4. Your fall may be perceived by others as a license for them to do the same. 5. Your inner peace is shot. 6. Your confidence before God will be forfeited. And 7. Your enemies will have further reason to jeer and sneer, and the cause you represent will suffer harm. Needless to say, the downside of immorality is a very high price to pay. So what's the answer? Well, we find that in Galatians 5:22. Be filled and stay filled with the Holy Spirit. Now, when we talk about the Holy Spirit, there is the infilling and then the indwelling. So when you hear those terms, it simply means this: be filled and then stay filled with the Holy Spirit. Here's why, and that answer is Galatians 5:22. The fruit of the Spirit is self-control. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.